NFP, and especially if it's such a crucial NFP number. So we keep saying since last week after the Mr. Powell's remarks that NFP this week is crucial because it will give us a clear sign on whether the Fed will actually shift or postpone, if you prefer, the policy for the tapering, for November or even December, or whether it will be actually today's NFP will be sufficient for proceeding to a tapering earlier, and that means September or even October. So that's why it's considered to be a crucial NFP today. So we are less than 9 minutes away from the NFP release. I would like first to make sure that everyone can hear me loud and clear. Hello, Vicky. Hello, Usman. Hello, Brighter. Welcome. So, guys, you will excuse me a bit, just to summarize a bit where we are standing right now ahead of the NFP, and we're gonna go through the analysis together. I can see your the assets that you want me to cover. We'll do it soonish, as long as I just provide a quick briefing where we're standing right now. So just to highlight that we have seen a lot of ranges, a lot of sideways movement because of the anticipation of NFP. Okay, so bonds were in a defensive mode ahead of the jobs reports today. Yields were quite modestly higher. We had a mixed picture in equities as well, even though the major indices held at record highs. The US major indexes has held at record highs, but a bit sideways. Nikkei surged more than 2%, especially on the after. That was something that I'm not sure whether you follow the news, but why Nikkei actually spiked overnight, it was due to the reports that Prime Minister Suga plans to resign, with his successor hope to add support. So once again, what this successor represents. I mean, the fact that it represents an additional support to the economy, to the Japanese economy, implies that the central banks, the central banks are actually dominate the attention for the markets, and that's why we've seen actually Nikkei spiking higher. On the other side, we had a lot of data releases this week, but because of the anticipation of a very solid NFP today, we have seen the data being a bit ignored. So the attention is fully on jobs. So where dollar is seated, dollar remains soft. Euro dollar in 1 month high. Despite yesterday's factory and trade data and vehicle sales as well, that heavily weighted on the third quarter projections, the GDP projections as well. We have a lot of COVID restrictions still, which seems that they will presumably be manifest in today's August payroll report. So all these have maintained some pressure on the dollar so far today. So let's start with dollar. But let me just start with dollar. And guys, I'm not sure whether you are aware, but the expectations for today's reading, and actually it's a good idea to show you also the calendar, since we are just 6 minutes away from the release. So as you can see, hopefully you do. No, you can't, because you can only see me. Sorry for that. Let's hide that. Okay, perfect. This is a calendar, guys. So as you can see, we are less than 5 minutes away. Non-farm payrolls expected at 750,000. So significantly lower from last month, from July's 943,000 jobs. Unemployment expected to decline slightly at 5.2. So expectations are showing that there would be a slowdown due to the virus impact and the restrictions impact. Hourly earnings also are expected to slide down a bit at 0.3. So let's wait and see. This is the expectation. So any number above the 750, it would be a hint that Fed could proceed to a tapering. Sooner than November and December, September and October in the spotlight, and this could, so a number away above the 750 would be positive for dollar, while a missed will add pressure, a lot of pressure on dollar. This is what the theory tells us, because a mist of today's jobs, okay, clearly state that the U.S. economy, the U.S. labor market more precisely, has been hit significantly from the virus and the virus restrictions. So it won't really have a growth. So this is what the Fed is expecting to see a significant growth in labor market. So if it doesn't see that today, then the expectations for the tapering will be shifted, will be postponed by the end of the year. So that could have further negative impact on the dollar. So let me present you the dollar index, which I should have had first over here, and I didn't. Sorry for that, guys. So, dollar index, here it is. You can see this is a daily chart, dipping lower, retesting the 200 day moving average, 92.21 right now. Let's put the 1 hour chart, and you can see this continuous decline with some corrections and a lot of flattening so far today ahead of the data. So let me see the chart. You can hear me loud and clear. I can see that you haven't put any comments in regards to a problem in the audio. That's good. And let me also switch on my Facebook as well, just to see the questions from the Facebook attendees. Okay. So, I should have had my Facebook. Okay. So, guys, give me a second. Okay, I'll come back to find the NFP Facebook link. I cannot find it, unfortunately. Right now, where is that? Come on. So, okay, never mind. Thank you for the confirmation in regards to the audio. That's good. I know that I'm live. That helps me. Okay, guys. So, what else before we until we're waiting for the data? So I already mentioned I already stated the correlation of NFP and Fed, and the impact that will have in the dollar. So having this in mind, anything surprising will be positive. Okay, anything above will be positive, anything below will be negative. So let's wait and see. Okay, let me see a bit your comments. Any questions before we start analyzing the okay, here I have find the Facebook page. Perfect. No questions from the Facebook. Okay, that's, at least I have it next to me, so I will keep monitor. So guys, in Facebook, for people that they have just joined, you can ask anything you want. Stick below the lives, both in the comment box below the lives in YouTube and Facebook. You are the assets that you want me to cover, or any questions. So a big dip on dollar just now. So the data are out. Let's see together what is going on. So 235. Oh my god, that's a massive miss. Like, oh my god, I haven't seen such a massive miss for a long time. Actually, let me share this with you guys. Let's get rid of it the dollar. Let me show you the calendar because you need to see this. So 235, just 235,000, and we were expecting actually three times more than that. That's a very big miss. Unemployment rate falls to 5.2, even though, okay, in line with expectations, even though Bloomberg was expecting to see that 5.4. So, sorry, it was 5.4 last month. So we have a dip on unemployment. That's positive, okay, in compare with last month, but I don't think that matters. I don't think that will help the dollar at all. It's such a big miss on the non-farm payrolls that the rest of the data don't really matter, if you ask me. So hourly earnings rose 0.6%. So that's supposed to be positive for dollar, positive for the labor market in US, positive for the US economy. 61.7 is the participation rate. Again, higher than expected, but in line with July. 8.8% unemployment rate. U6 actually unemployment rate. Another positive data, average hourly earnings in a year basis have been improved at 4.3%. So revised higher. Even there is also a revision higher from July's 4%. So again, this is positive. So you can see that 5 out of 7 releases were positive. But what dominates the market is clearly this big mess, despite the fact that July's reading has been revised higher from 943,000 to 1,053,000. So guys, it's a big miss. So let me turn back to dollar because you need to see that indeed the dollar started declining as it was expected if we had a disappointing result, and this is massive actually. So dollar right now falling clearly, as you can see. Let me zoom in a bit. Let's go to the 30 minutes chart instead of an hour, or even the 15 minutes chart if you can. Okay, much better. Fall away from this narrow 92.20 range that we have seen since actually yesterday. Since yesterday night. Big miss, already 30 pips lower. So let's do some proper analysis and find the next key support area for the asset. Okay, clearly, the next immediate support will be back to the end of July, just 20 pips lower. The very next one, back to the 21st of July, so another 30 pips lower, so 91.70, 91.78, 91.48 next. And if I just add some Fibonacci levels as well, just to have in mind what's going on in the medium term basis. Immediate support, as I already told you, is at 91.78. If we round it up, that's 91.80 level. Just 20 pips. We're 20 pips away. We can see that Bollinger Standard extending lower. The 50 50% retracement level is at 91.60. This is the mid territory of the rally that we have seen since May. Okay, so key retracement level and key support level as well. So we have already found quickly 3 immediate support levels for the day after this miss of the NFP number. So 91.80, 91.60, 91.40, like 20 pips at the time. But the ATR is suggesting. ATR is at 37 in a daily basis, not 0.37 in a daily basis. And okay. So anyway, the dollar has been in a decline since the end of August, more precisely 20th of August. So it's been in a decline for nearly 2 weeks now. So the fact that it has broken the 20-day moving average brings the medium-term outlook, the daily or even weekly chart, turning into a negative outlook. So this clearly adds to the expectations that the Fed and Mr. Powell, more precisely, will not announce any tapering soon. So that shifts, as I explained earlier, that we're going to see tapering like November or even December, since that presents that the Delta variant had actually already a significant impact into the labor market, despite the fact that unemployment has rise higher. So let me see a bit the news feed just to see whether I missed something. Okay, nothing yet from. Okay, so let me see your comments. Let's get also to the 30 minutes chart, so you can see, guys, that we have a shift, actually an extension in the near term. This is a 30 minutes chart. We can see that we have a dip on the momentum indicators, so turning back down, even though that's a bit early, but double fractals have been broken. Immediate support has been broken. The 38.2 Fibonacci level from the May up leg has broken already. So we're clearly waiting for the candle to close in order to confirm this shift further to the downside. So no questions in Facebook. The screen isn't clear. It might be your connection, I'm afraid, Caroline. No, that's not Caroline. So okay. I think it's the internet, dear Caroline. I cannot do anything, I'm afraid, right now. Maybe, I don't know. To be honest, it's the internet from your side. Maybe it's the speed of the internet. So let's start with the questions and the analysis. Pound dollar. Usman requested for pound dollar when we initially started the streaming. So let's find a pound dollar. Okay, there it is. So okay, let me just check the news feed. Okay. Okay, obviously, 1 hour chart, we have a tail higher, but as we keep repeating, guys, you need to be a bit patient and wait for the candles to close before taking any trading decisions. So we initially seen a spike on cable over here to 138.70 territory, nearly 70 territory, to be honest, as soon as the data were out, because because of the weak dollar, more precisely. So the lower than expected, the significantly lower than expected figures added initially in the very first watch the a pressure on dollar, and that's why we've seen all the dollar currencies and dollar pairs, dipping, actually spiking against a dollar, and we've seen the dollar index tracking lower. But if we look the broad scenario, okay, okay, let me just, if we see the broad scenario, and let's get back to the dollar index. Okay, we might see this might be actually, maybe there might be a positive stance of the dollar. So if we need to wait and see today, so what at the closure, what you need to keep an eye on is whether you can see whether the dollar will close to above or below the 92, 91.33 actually, below the 92, or even this is the 20-day moving average, sorry, 91.60 territory. As long as, so this is the weekly chart. Let me clear this mess. Okay. So 20-week moving average, it's still at 91.60. And before we said that 91.60 is 50 is 50% Fibonacci retracement as well. So this is a crucial resistance, a support, sorry. And if the asset maintains if the asset maintained today above it, okay, this means that the pressure is limited, because as long in the long term, this is in the long term for those that are interested in the long term basis. So this means that the in the long term the dollar remains on the high territory of 2021's performance. Okay. However, if it closed below it, that could take us down to the floor that we have seen this year in the 89 territory. But okay, let's see the coverage a bit of. Okay. So as I was saying, keep an eye on today's closure and keep an eye on whether we're gonna see a confirmed breakdown of the 90 to 50, which is a 200-day moving average. So if I zoom in and go back to the 1 hour chart, you can see that our hourly candle has quickly turned back to the upside. So it's crucial to wait for the candles to close in order to take to see whether actually markets have they are continue to believe that the mist of the NFP will actually monitor the asset, and whether we're going to see the positive side. And the positive side is the rise of the manufacturing payrolls, is the rise of the is the decrease of unemployment, is the rise of the average hourly earnings. So as I said, they weren't, not everything were bad. Okay, actually the majority and the breakdown of the release was positive, as I can see from the Bloomberg TV that's opposite to me. Even the fact that we have, as I said, we have seen also a revision higher of July's payrolls from 943,000 to 1 million, to 1 million 35, if I'm not mistaken, jobs. So we had a revision higher. We had higher average hourly earnings. We had lower unemployment rate. We have private sector also rising. So as a whole, we take everything into consideration. It was a positive. Report overall, but with a big miss on August non-farm payrolls. So we need to wait and see what will dominate in the market. Will we're gonna emphasize them. So we're gonna emphasize on the fact that as a whole it was a bit of a positive report, or they will stick to the big miss that we had on non-farm payrolls with just 235,000 increase than the 750 expected. So, and you see how quickly this 30 minutes chart turned back higher above 92. So we cannot really tell, but have in mind that we need to wait for the candle to close. If we see closing above the immediate floor at 92.14, which is 200-day moving average, is triple fractal in the 30 minutes chart, is today's support as well. So if you close above it, then that means that actually we might not see a pressure on dollar after all. But if we have a confirmed closure below that level and a decisive actually closure below that level, then we might see further fall for dollar. So it's a bit early to tell, but keep an eye on the levels that I have just presented to you. Let me get back to the pound. So, okay, pound has as an immediate resistance, my dear Usman, 138.44. So you need to keep an eye on this level, whether the hourly or 30 minutes candle, depends what kind of trading you're doing, what kind of strategy you have. If we see a candle closing, so confirming above that level, so further rally could be seen from pound with next immediate resistance. Sorry, let me get rid of this rectangle. So with next immediate resistance at okay, let's put some Fibonacci extensions. This will help you guys like that in such a short-term time frames. I like using Fibonacci expansions as well. So can you see how helpful this is, Usman? So immediately with the Fibonacci expansion, sorry, that I have used, we have 138.58. Okay, depends on what time frame you are working on, but this is the 1 hour or even 30 minutes chart. So it's a very near term picture. It's a very short term resistance areas. So 138.50, 138.85, the 100% Fibonacci expansion, and the very next one lies up to 139 and 139.50 territory. So this is the immediate next resistance areas. In case that we've seen the 30 minutes candle breaking significantly and closing above the 138.44, 138.44, it was actually the confluence of this week's high, but also the upper Bollinger. So a close above it will mean that this narrow range that we have seen the last 4 hours has run to its end. So it has faded, and we might see an action taken. So yeah, I know this looks a bit messy, but key level to be monitored would be today's high. So you need to wait to see whether the candle will close above it. And if that happens, next immediate resistance, will be on the 138.80 level. So, sorry for that. So 138 key resistance area, 139 the next is a round number. It's a round number, so it's always a key resistance level for pound. Other than that, guys, keep in mind that in the long term, this is a daily chart, okay? Let me clear a bit this mess for long-term traders. Okay, let me get rid of Fibos as well, so you will be able to see, for anyone that is interested on in the medium term, actually not long term, that is interested in a daily or even weekly basis. So, okay, get rid of all this. Perfect. So the asset has posted a double bottom so far in July and again in August, while, as you can see, it has managed to recover since the decline that we have seen in June. It has managed to recover already more than 38%. So it has slowly starting turning into a positive mode. However, for the pound to, in order to say that the pound will potentially get back to the 140 or even 142 territory, we need to see it breaking the 50% retracement level from the down leg that we have seen, from the sell-off that we have seen in May and June. So that means that for the long term, you need to keep an eye on 139, and more precisely 139 20, 139.15 territory. A break above it could open the doors way further to the upside, to the upwards, to the northwards, even to the levels that it was back in May. Okay, but we have in Bank of England also in 2 weeks, so this might be a key driver for pound as well. So, okay. Anyone else asking for pound? We covered pound, so we're done with pound. Let's move on. Gold. Okay, gold. Before I move to gold, okay, I haven't shown you anything in regards to vice versa scenario in regards to a decline, and though this looks a bit unlikely. Immediate floor could be found on today's bottom at 138.16. Okay, while the very next support level will be on the 138 round number, the repeatable resistance area converted into immediate support, and so on and so forth. So let's move on to gold. Sorry, someone asked about gold. Okay, perfect. Okay, Tim, as you can see, gold has been appreciated so far today. So we have a big jump on gold as dollar moves lower, obviously broken the significant 1820 level, and even the high that we have seen on Monday, 1823. That these two were key resistance area for the whole week, and actually clearly show that gold in the near term has exited this narrow range, this sideways movement that we have seen the whole week. Actually, yeah, this was the whole week. It was actually since last Friday. Yeah, a whole week exited the range, broken the high of the week. Sorry. So now the next resistance area for gold is just around $9 higher, and this triple fractal, which is a key resistance area and a strong resistance area, because we have seen the asset retesting 1832 level in the mid of July, in the end of July, in the beginning of August, but unable to break it. So it failed 3 times already and is a 3 months resistance area. So this is a resistance area. The 1832 is a resistance area that hasn't been broken since the beginning of June. So So far, way very positive gold for the day, extending gains, breaking weeks resistance, and keep moving higher on the back of a weak dollar after the 235,000 jobs. So let me go shift to the 30 minutes chart, keep extending higher, MACD increasing. So yeah, guys, the next resistance for gold is the 1832. That's pretty much it. If it fails, however, to break that level by the end of the day, then we could see it turning back to where it's to this narrow range in which it has been for a week. So back to 1810 territory, 18.8 and 1820 range. So this is the range that we have seen for a week. So if it fails to extend gains, as you know, the market, the asset always return in every extreme. If we have an extreme move uh, that it hasn't been sustained, the markets tend to come back to the average price. So in case that it fails to extend gains, you might see turning back lower and entering again this narrow range between 1808, 1820. So, okay, for those that they might be interested on near term resistance, even though I need to go down to the 30 minutes chart to apply such a Fibonacci expansion. But yeah, let's do it properly. Let's go to the 30 minutes chart because I know that you guys, a lot of you guys that are actually scalping on it or trading in a very, very short term time frame. So, okay, it's already exited these levels. Let's try to see. No, broken. So in a 15 minutes environment, it has already closed the very first 15 minutes candle at 1819. In the next 15 minute candle, it keeps extending higher, already broken the 200 Fibonacci expansion. So the very next one is seated at the, is seated at the 1826. The very next one obviously is the peak that we have seen on the release and the 1829 level. Let me see whether there is a breakdown somewhere. Okay, perfect. Let's keep moving with the questions. We have already replied to that. New Zealand dollar. New Zealand dollar. Actually, guys, I don't know how interesting it will be to ask me for every single dollar currency, but as long as we have a weak dollar, then the dollar related, the dollar pairs will present a weak dollar and a stronger, actually, they will move along with the weakness of the dollar. So, but thank you for bringing up Adobe the Kiwi. As we said in the Instagram live on Tuesday, and as Stuart mentioned yesterday, we have seen commodity related currencies on bid, and this is something that we have seen for more than 2 weeks now. And thank you for bringing up Kiwi because we have seen it yesterday breaking 3 months resistance at and the round 0.71 level, as you can see over here, and is extending this rally that we have seen since the mid of August, is extending it once again today, actually making it clear that there is a lot of positive bias, a lot of bullish bias for Kiwi. And if I'm not mistaken, it should be, yeah, that it is already broken the 61.8% retracement level and continue moving northwards. So the and why is this significant? This is significant because Kiwi has turned the outlook, the medium-term outlook, the daily and the weekly outlook into a positive outlook. You can see that the Bollingers, the daily Bollingers, are keep expanding higher. You can see that. Let me put the medium-term template. So this is the 50 and this is the 50. Let me zoom in a bit. Can you see this is my 50 and 200 day moving average, and we have a bullish cross, not confirmed yet, but confirmation it will come no later than Monday. A bullish cross could confirm this strong rally and the shift of the Kiwi into the upside, with the attention turning to May highs and the 0.73 area. Okay, why is that? The asset has managed to rebound significantly from the lows that we have seen in August, recover more than 65%, nearly 65% of the dip that we have seen so far this year. And nonetheless, the momentum indicators and moving averages are actually supporting this rally. It doesn't look that for now this rally has run out of steam. Bollinger is extending higher. Okay, parabolic SAR are positive. Can you see that are far away from the price, and they are below it? So that's a bullish sign. RSI slowly smoothing, increasing, flirting the 70 barrier, while MACD, and you cannot see that because I'm in front, but let me put the navigator. So if I double, okay, so I have put MACD twice so you can see that. And you see that MACD lines have already turned negative, so the only thing remains is for the signal line to follow as well. But yeah, positive outlook for Kiwi. Intraday now, my dear Ushman. Broken, double fractal, which was actually the high of the day, has broken significantly, closed way higher than that, way above that. Outside Bollingers keep extending higher. MACD is extending higher, is strongly is extending its histogram lines and its signal line above, further northwards. Actually, we have this the MACD above signal line. That's something that is bullish. RSI already broken 70. So also parabolics are far away from the actually below the price as well. So positive near-term Kiwi and positive medium-term and long-term Kiwi as well. So if you want to find the next resistance level, the next resistance levels for the Kiwi, okay, so '61, '68. It's a 200 Fibonacci, the 200 Fibonacci expansion. And not sure if I have pivot points over here, but it's good for you guys to go down and see, go to the daily chart, find where the Bollinger is seated. Bollinger is seated at 71.90, so that's another resistance area that could be used for the today's intraday analysis. So earlier peak, the next immediate resistance, and the very next one is the 71.90. ATR is implying to 0.11. Okay. And the asset is currently at 0.7150. So let's move on. We have cover gold. Euro dollar. Okay. Euro dollar. Okay, guys. This is euro dollar. Um, okay. Let me just check a bit. We have the breakdown of the of the NFP report, and we do. So what does it say? Just give me a second, guys. Sorry. Unemployment, participation rates also increased. Our links increased, but okay. Household survey was decent. Long-term unemployment also slowed down, but again positive. Manufacturing payrolls also higher. Private payrolls also higher. Employment population ratio remain flattened, remain the same as before. But before the pandemic, the employment population ratio was at 61%. Okay, nothing really exciting from the breakdown of today's data. Keep in mind that the Fed's meeting is on the third week of September, if I'm not mistaken. Yeah, it's on the third week of September. So we might see an official announcement from Mr. Powell keeping policy unchanged. So let's get rid of that. Yeah, nothing else, nothing new from the news suite. So let's keep moving. Euro dollar. Okay, great. We have officially the close of the hour. So we have an hourly candle closed already. As you can see, the asset, the candle closed above today's high. So, and even above the Bollingers. So we have a nice bullish cross of the 5 and 9 exponential moving average, actually adding to the to a potential extension of the euro dollar northwards. So bullish cross from the fast moving average, breakout of the latest up fractal end days high, breakout outside the 1 hour Bollingers in the 1 hour time frame. MACD resumes its rally to the upside. RSI already broken 70 and still pointing upwards. It hasn't turned lower. Stochastic, as you can see, we had a bullish cross over here and it keeps extending higher. So the momentum indicators and our candles implying or suggesting, if you prefer that, there is further strength to the upside. It's flirting right now with the 119 territory, key round number, key psychological level as well. So if that breaks, if the 190 the asset managed to extend gains further to the upside, the next resistance area to be seen will be okay. Next immediate resistance areas are on the 119.35, that's the 161 Fibonacci expansion, and 119.60 a 200 expansion. So that's quite nice because it coincides, okay, with the area seen back in June 24th and the fractal since back in June 24th. So that's brilliant. Okay, if I just stretched a bit this and actually, okay, this is it. So on the breakout of 119.35 is the next resistance area. That will mean the breakout of 2 months territory. And if something like that happened, our attention should turn back to this area over here. So this will help you guys identify your next resistance levels, okay? And let's see also the long-term direction. So the breakout, the performance today confirmed a breakout of actually a move and a reversal of 38.2% of the losses seen since May. But that's quite early to be mentioned. So we need to wait how the weekly candle will close, whether it will indeed confirm a closure above the 38.2 Fibonacci level or not. So that was on euro dollar. Okay. By the way, something that something that I mentioned earlier before the NFP release. Have in mind that all the data, the variety, the all the recent data that we have from the US have actually weighted heavily on the third quarter GDP projections. So this this actually brings euro dollar to a potentially bullish outlook, but we have ECB next week, so that will clear the direction of euro dollar for September and even October for the third quarter in general. So we have ECB next week. There are a lot of ECB officials that have flagged actually the possibility of a quantitative easing tapering announcement next week. And it's something that it seems pretty much certain now that the ECB will start to take the foot off the accelerator amid some growth forecasts that we have seen. So yeah, the futures of the euro dollar is not solely depending on the US data or the Fed, is also depending on what we're gonna see from the ECB next week. But yeah, in general, we had a nice rally. So we need to wait and see whether there will be a confirmed breakout and exit of this narrow range that has been seen for the last 2 months, in order to strengthen to actually shift the outlook into a positive one. So yeah, so that's it from euro. We'll have covered gold, euro. I couldn't really say that, my dear Aden. Aussie, yep, Aussie. Why not? Aussie. Similar with Kiwi, commodity related asset benefited. Also, Australia had some positive news overall, data overall this week, even though yesterday the data were clearly showed the impact of the Delta variant. But the asset, despite all these, the asset broken the July's the actually 5 weeks resistance has been broken today. It's flirting with the 200-day moving average right now, which could provide a significant barrier, could be present as a significant barrier for Kiwi, because guys, in contrast with the Kiwi, sorry, Aussie, in contrast with the Kiwi, remains under pressure. Can you see that the MACD remains in the negative territory? So the asset is also at how many? It remains back to the bottom of the on the in the low area that we have seen since October, November 2020. So it's far away. It had a very big decline in 2021. So the long-term outlook and the medium-term outlook for Aussie is not similar with Kiwi. Actually, is still negative. So we need to see more in the medium term, not to say that okay, Aussie is ready to um, turn back into a positive. Actually, to it's expected to have a positive outlook in the third quarter or fourth quarter. This is at the bottom of the 2021's territory. MACD is negative, so in the long term, the Aussie in the long term, guys. Okay, in the long term, I'm in the daily chart. In the long term, the Aussie is still under pressure. Now, if I zoom in and to check the intraday and medium term picture, you can see that it has seen a nice boost, a nice rally since the mid of August. So this rally remains intact, so remains in line. As you can see, it's extending higher. We have seen some temporary corrections, but it's keep moving northwards. So in the near term, Aussie is still positive. MACD is extending higher. Can you see that? If I put a line connecting the lows of the MACD, you can see that it's keep rising and rising and rising, extending higher. RSI the same, even though it's at 83, it hasn't shown a pullback yet. It's keep strengthening. We have one, and two consecutive upwards bullish candles in the 4-hour chart, extending gains, keeps moving lower, but all the moving average are keep moving higher, pointing higher. So Aussie in the near term is in a rally. 1, 2, 3, 4, 5 consecutive bullish days. So what we are really waiting to see is whether tonight it will close above the 200-day moving average, uh, confirming the continuation of this of the rally that we have seen the last 2 weeks. But as we can see from the technical analysis, momentum is still positive in the near term. So intraday and also for the week ahead, if of course we have a confirmation tonight that it had managed to break the 200-day moving average at the 0.7465 territory. Bollinger's, however, have started expanding. So that's again another positive sign for Aussie. But let's be a bit patient. Intraday rally has been extended, as we already said. That's clear, right? Okay, what else? Okay, let's move on. Nasdaq USA 100. Thank you for bringing that up, dear Bashka. Here it is. Okay, sorry. Narrow range remains. So intraday, actually, the picture hasn't really changed for USA 100. So remains in this narrow in this range that we have seen the whole week. So between 50,554 and the 50,690 is 96. So remains sideways. So, however, in the long term, um, have in mind that if it breaks that latest high, we're waiting for further boost to the upside as the overall outlook for tech-related asset in general, the U.S. majors, the major indices is positive. Now, intraday now, okay, intraday now. Let me put the 30 minutes candle. So the 30 minutes candle closed bearishly, breaking the immediate support are 15,600. Now it keep extending lower, just a breath away from the 200 period moving average. Bearish cross. I can see a bearish cross being posted from the fast moving average, the 5 and 9 exponential moving average. So we have a pressure on USA 100 in the very short time frame. So just a breath away from the 200 period moving average. Next support is just few pips lower at 15,550. That's the bottom that we have seen yesterday. So it's yesterday's bottom is the next support level for USA 100 DR basket. Okay, if that breaks, then another 30 pips lower is the next latest down fractal that give us the next support level for oh my god, already touched that. So already broken 200, already just a breath away from the from yesterday's lows. 31st the week's lows is at 15,520 is the very next support area to be seen. I zoom out a bit. Yep. However, if I put the 4 hour, the daily chart, let's see, guys, and apply. Okay, I have already provided you the immediate support levels. Now, please have in mind that the medium term, the next support, the key support areas will be the Fibonacci levels as usual. Okay, but the overall outlook remains positive. Near-term picture turn into a negative one as the asset has exited this narrow range and has turned lower by posting around 100 points decline. So let's keep on. This has been down. We have seen Kiwi, we have seen gold, we have seen Aussie, we have seen USA 100 1 hour chart just now. So let me put back the support areas so you can see them again. The support areas for the day, for today, intraday. Okay, 1, 2, 3, 15, 5, 5, 0, 1, 5, 5, 20, 1, 5, 20, 1, 5, 4, 6, 0. It's a strong dollar day so far. There charts. We had a disappointing. I assume that you have entered the live few minutes ago. So it's a weak dollar so far. Unfortunately, we had a disappointing data, but not a disaster because, as I mentioned, unemployment has been improved. Average earnings have been improved. So not everything were bad. But But again, is today's data clearly stated the impact of Delta variant once again. We have ISM. Okay, Astrid, it's just show me that ISM is 20 minutes, 35 minutes time. The service is a PMI, so it's another key data release that you need to wait and see today. ISM services, PMIs later on. So if they are expected, let me see my calendar, they're expected to come at 61.5, so a bit lower than July's reading, but still above 50, so still in a recovery mode. So this is the next data to be seen, to see whether the services have actually impacted from the Delta variant, and whether we did we have an impact of the Delta variant not solely on the labor market, but also in the services sector. And thank you, Stuart, for bringing that in, even though I have written out the events the events ahead and I forgot about it. So on Monday, guys, United States and Canada are closed because it's the Labor Day, bank holiday. So imagine the volume that we're gonna see coming back on Tuesday when these two big markets will be back. So on Monday, have in mind that the US and Canada, big economies, will be close due to the Labor uh, Day holidays. So what currency pair, please? I'm not sure what this question is about. Shadrach, what parts currency pair about what? What currency pair you should trade? I cannot tell you that. Scan the market, see what makes sense to you, check what you understand, and take um, your decision based on the analysis that you have done. Um, um, uh, Okay, okay. I'm sure that is if Mr. Biden sees your comment, they actually will be very glad. So no matter how weak the dollar is, President Biden remains the most frail-looking, strongest man on earth. I like. Okay, that's good. Uh, Euro dollar buy or not? I cannot tell Shidrat. I'm here to analyze the market. I cannot tell you what to do. But what I can tell you about euro dollar is that we have seen for the time being a breakout of today's resistance, actually the week's resistance, and we have seen a decisive breakout of days highs at 118.84, while we have seen a bullish cross in the 30 minutes chart of the fast moving average, which they're still pointing to the upside. So the next key resistance for euro dollar remains the around 119 territory, while if it managed to break that level and close above it, the next resistance levels for euro dollar could be seen. I delete them, but let me put it again. The next key resistance areas, if we've seen a closure at the top of the hour, at the bottom of the hour, sorry, above 119, the next resistance levels for euro dollar would be at 139 and 1935 and 11960. Okay, this is what I can tell you. Shadrach. Intraday picture remains positive for euro dollar as MACD keep extending higher, RSI keep extending higher as well. So yeah, that's it for euro dollar. Vicky, as I think you're the one asked yesterday about, you asked Stuart about Bitcoin. We don't offer anymore cryptocurrencies. That's why you are unable to open a Bitcoin chart, because we no longer offer cryptocurrencies for trading. Okay, we don't offer them yet. Sorry, we don't offer them anymore. The same stands for Litecoin. No cryptos are offered. Um, uh, we don't offer binary options either. Um, okay, gold. Okay, once again, let's do once again gold, and I will call for some final. For it will be the final call for questions. So gold. Okay. Did you mention in the long run? Okay, you're asking for in the long run. So obviously, let's get back to the daily chart, and we have put some nice. Okay. Okay. So okay. So you give me just to okay. This is the daily chart, my dear Vicky. Okay. So we have seen some sideways movement this week, but this is in the long term, this is a key resistance area to be seen for gold. Why is that? Because first of all is 3 months resistance. So the 1832 levels is a 3 months resistance. So as long as the gold fails to extend gains above that level, then gold remains neutral or neutral sideways if you prefer. So in the long term, we need to stay focused on this resistance area and whether it will fail once again to break that level. If it actually managed to break decisively and move above it, okay, then we could start it turning our attention back to May's highs, because the breakout of this level literally means the breakout of 3 months resistance. It also implies to the breakout of 61.8 retracement level, which is the most significant one of all, and this could turn the gold's outlook into a positive one. But for the time being, the asset remains below that and has failed to break that level for 1, 2, 3, 4 consecutive four consecutive times in 3 months. So key resistance area for gold is 1832 in the long run. If this breaks, then it could turn gold into a positive outlook for the next even months. I will not say just weeks, even months. Okay, but okay, let's put the weekly chart on as well. As you can see, it's already for a second week in a row above the 20 week moving average. Okay, so it has managed to recover significantly, nearly 60% of the losses that we have seen since the mid of May. So it's neutral. The outlook right now is neutral. We need to see the breakout. By neutral, I mean that it's just stuck between the 1830 and the 1800s territory. You know that the 1800 is psychological level for gold. So if it fails once again to break away from the 1832, then we could see a potential putback back to 1800s territory. So in the long run, right now, the gold is neutral as long as we don't see a breakout away and above the 1832. Hopefully this helps you, Vicky. Dear, any NFP prediction? NFP is already out and it has significantly missed. Okay, significantly missed. So that's why we have seen the dollar dipping lower, but still we have ISM services soonish. So we are waiting to see whether the service sector has been significantly impacted from the Delta variant as well. That was pretty much from me, guys. I hope. Okay, I'm gonna double check whether there are any further questions. There are not any, as I can see. So I'm gonna call it a day. I'm already more than an hour live. So keep in mind and ISM services in 25 minutes. And on Monday, the US and Canada are closed. Okay, so two big markets are closed for bank holidays. So yeah, keep that in mind. Next week is a packed week. We have RBA meeting, interest rate decision and conference. We have Bank of Canada as well. We have ECB as well. We have a lot of data as well. We have inflation, if I'm not mistaken, from China. We have GDP for the second quarter from Euro and Japan. We have what else? What else? What else? I think that's it. These are the important ones. So a packed week from data side, but the attention would be solely is expected to be solely on the central banks. Three major central banks are releasing their they have their meeting and they are announcing their policies, their interest rate decision, and so on and so forth next week. So this will dominate the attention next week. So that's it from me. Thank you for watching. Hope you are having a great day and a great week ahead. Take care, and we're going to see you again next week.